So we got Rob Mitchell from the Oil Trading Room. Really excited to have Rob come in today. He's definitely no stranger to the industry. You guys have seen him with Indicator Smart. He's definitely been an avid trader. I think he's one of the biggest S&P traders in the world at one point in time. So glad to have him in here. He's going to be showing you the Oil Trading Room today and some of the things that him and his traders are doing day in and day out for oil. And really glad to have him in here. So I'm going to pass it over to Rob, and if you guys have questions, just type them in the chat box, and we'll get to them as we see them. Thanks, Rob.
Yeah. Hey guys, just give a Y if it sounds okay. If I'm not blowing out the audio here. Okay, good. Just let us know. If not, we'll adjust it a little bit. Thanks for coming in today, and thanks also to Shark Indicators for having me on board for the Sharkathon, and I'm always happy to do these. We have a lot of awesome material that we're going to cover today. Secrets of the oil trading room, cutting-edge research that can propel your trading to success. The techniques I'm going to discuss today work in any market, and but we do them in oil because we get the range expansions, and you also get a couple of different times a day. There's different ways that we might divide the day up, and it opens up opportunity mostly at two main times, but we'll get into some of how we do some statistics and things like that. And I'm going to just rap about that for a couple of minutes before we get started, because we're slated to come on in about 4 minutes. And so, but let me talk about that basic idea just for a minute before we get started with the presentation. Basically, I spent 20 years developing automated trading systems, and I used to have like a slogan, basically I would say, if it can't be coded, it doesn't exist. But then as the market volatility increased, and we started getting into intraday markets for trading smaller accounts in size than we were, say, on the S&P or something like that, or we're firing thousands of lots and things like that. I started developing systems for that, and some of my first systems were indeed automated trading systems. But what I started doing is developing statistics that applied to cases as they were developing, as the market's unfolding during the day. And so I create situations where I'm able to discern, based on the patterns that are occurring in the market, that there may be, say, a 80% probability that we're going to a certain level. So knowing that, sometimes I might have another probability as well. Sometimes I might have 5 or 6 of them all stacking up in the same place. Okay, I know this is going to this level, 80% probability, but there's this other one that says I'm not going there, and it's saying there's a 5% chance of me going there. And so more often than not, when you're in a case like that, the market's just not going to go anywhere. And so you're able to root out situations like this. But what's interesting about this idea is that you have a automated trading strategy that you are doing that is evolving as the market conditions change. And when you learn a few of these stats, you're just looking at the chart and they're just popping out at you. And it's actually a lot of fun. It's like spending your day solving a puzzle. And then you can convert that into active trading. And this is really fun for me because an area that I really enjoy is statistics and how things distribute out in time. And so I really enjoy doing that. And in fact, I probably enjoy doing that more than anything else, just finding these little treasures in the research and then bringing them out. And the Oil Trading Room has become a forum for this kind of thinking and this kind of trading activity. And it's really kind of developed because what's happened is we get people in the room who have collaborated and shared their ideas. And so then I will run stats on those ideas, and then we get more and more stats all the time, and some of them are better than others, and but we're always looking. I always like the ones that are in the 90s, are in the high 80s or better. And but we'll talk a little bit about that as the presentation goes forward. I have quite a few slides devoted to that kind of thinking that I think you'll enjoy, and so stick around for that. That's probably about 2/3 the way through the presentation. Thanks for coming in again. For those who are just joining us right now, we're right on time for getting started. Today's webinar for the Oil Trading Room, Amazing Secrets of the Oil Trading Room, Cutting Edge Research that can propel your trading to success. These concepts work in any market and in many time frames. As always, past performance is not necessarily indicative of future results. I'm probably not talking about a lot of performance-related things today, but don't use money that you don't have to use as risk capital. Who am I? Again, my name is Rob Mitchell, and I've been a commodity trading advisor. I've been a registered investment advisor. I live with my family. I have 4 kids who live in Carlsbad, California. I own a company called Axiom Research and Trading, which owns IndicatorSmart.com and owns also the Oil Trading Room, and in addition, various other sites. We do some trading and consulting for hedge funds and things like this. I've had a diverse experience, as I was mentioning earlier. I've spent a tremendous amount of time in my lifetime developing automated trading systems and learning how to test them and root out how to determine whether or not a system is solid and robust. And in order to do that, I've used statistical methods, and I test them, and I use methods that are pretty nasty. They're not very friendly to a trading system. I was actually discussing this in the Oil Trading Room today, is comparing your worst equity curve on an optimization to your best one and seeing if they're statistically different. Tests like this are usually pretty nasty because they'll show that there is no difference between the 2 equity curves, statistically speaking. The one's not significantly better than the other, which is pretty scary because you got one that makes $120,000 and the other one makes -40. And so, but I've devoted my life to that kind of research, and that's what I do. These days I trade mostly for my own account. We've got some bond models that we trade for clients, and a lot of people make fun of me because I'm relatively calm and I don't get excited and get all pumped up about stuff, and that's because I've been doing this for a long time. And some people have said the trading room's the calmest room they've ever been in, and don't take, if I sound like I'm not excited, it's not true. I'm actually extremely excited and passionate about what I do and sharing it with others and getting that collaboration going that I'm talking about that's just resulted in so much benefit in my life and the lives of others who have participated. So the Oil Trading Room has a join page there. If you want to join there, it's just oiltradingroom.com/join, or you can go to the site and hit that. You also might get a pop-up there if you're there for more than 20 seconds, and sign up and get on our list so that we can keep you informed of the things that are going on, get you coupon codes and stuff like that. The principles taught in the Oil Trading Room apply to any market, but I usually recommend crude oil is a really good learning environment because the amount of action that you get in any given day, the number of pivots that are occurring, the number of trends that are occurring and things like this are more than other markets, and the expansion of range that you're getting are more than other markets, and so you can learn really fast how to trade in crude oil. If you start in the S&P, just off the top of my head, you're probably getting 8 times the action in crude oil, and so that's 8 times the opportunity to learn. And so I recommend crude oil as a really good learning environment. I'm going to really boogie today, so take some notes. We'll try and get some questions later if we have time. These sessions are a little shorter on the Sharkathons. If you need to reach me, I can be reached at support@indicatorsmart.com or support@theoiltradingroom.com. In this webinar, I'm going to cover a wide range of topics that can help you to get a solid tactical and statistical edge in navigating the market. And we have a lot of world-class traders in the Oil Trading Room that participate and contribute to the room, and it's really turned into a remarkable forum for traders. Many of the techniques I'm going to show you can be used as a standalone methodology. You can take like one of these things or two of these things and turn it into something really usable. And to refine the techniques and learn them completely, and to really advance your trading, you want to join the oil trading room. Don't shortchange yourself. I want to give you a special offer at the end of the webinar for that. If you'd like to advance your trading skills in any market, so it might be a good idea to visit there, and you'll see what other members are saying there on the Reviews tab. The only place a dream is impossible is in your own mind. I work a lot with traders, and the things, the stumbling blocks that they get into in the process of trading, and that is actually a whole topic unto itself. Is actually one of the things I often will mention, or one thing that I see is, for example, the way they teach Korean archers. The Korean archers, they don't even let them fire an arrow until they've been holding the bow for a month. And then what they do is they set the target like 3 feet in front of the archer, and he fires at it. Of course, he gets a bullseye, right? And then through this extended training process, they might not even let him shoot that until he's been holding the bow for 3 months. They'll progressively move the target away such that by the time that target's 100 yards away, 100 meters away or whatever, he's never missed it. Never gotten anything but a bullseye. They got some of the best archers in the world in the Olympics, the Koreans, and this is how they train their people. Now this is very interesting because you can't really do that in trading. In trading, you have to fail your way to success. You actually have to make bad trades, and you have to learn that. And in the process, you have to also understand that the fear that you're experiencing is normal. When you use statistical methods like what we use in the room, if you know there's a 92% chance that a target's going to get hit, and you know it's 22 ticks away, and it doesn't get hit, then you still know you made the correct decision. But if you don't have that as a framework, like the Korean archer, for getting a feedback, then it's easy to get into a mode of condemning yourself in the way that you're trading. And so it's really wonderful when you're able to trade with statistical scenarios in mind as you're doing it. And like I said, we're going to get into that more. Okay, we're going to cover a ton of stuff. We're going to talk about the megabars that we use in the room. It's a form of a Renko bar. We're going to talk about different kinds of bar patterns. These are encompassing patterns. The E2 pattern is encompassing pattern 2. The Me2 pattern is a variation on the E2 pattern. The 112 pattern, and many others that can be used to make a standalone system. We got people in the trading room that just trade the 112 pattern, for example, in context, of course. We're going to talk about the oil trading room trend chart and the statistics associated with that. We're going to talk about the trapped trader oscillator. We're going to talk about the 5-tick rule. We're going to talk about the concept of the path of least resistance. This is where you have multiple statistical scenarios going on in your chart, and the market's almost invariably going to take the path of least resistance when it does that. Then it's a matter of going down to your setups and getting into the trades from there where you can manage your risk. Advanced market profiling techniques. We're going to talk a little bit about that. We do advanced market profiling techniques by using statistical methods. We may not even need a profile to do it, and I might talk a little bit about that if we have time. Oil trading room statistics, know your probabilities. For example, would you like to know if there's a 96% probability of taking out a new high when there's 60 ticks to go? These kinds of things happen in oil a few times a week probably. We'll talk about period statistics, how there are various statistics for the market hitting targets at various times during the day. We'll talk about day level statistics and what it means. We'll talk about advanced targeting. The oil trading room has over 100 blog articles at this point covering these kinds of materials and more. So why do I do the room? The opportunity in the market's just crazy. It's just astounding. And when you have all these different techniques for trading, people in the room can trigger into trades and all have their own liquidity that they're dealing with. We're going to look at factual, research-based ways of taking advantage of the market. So megabars. This is our main chart in the room, or it's some model of our main chart in the room. I'll show you a main chart in the room, but this is basically what it looks like. A megabar is a bar that is restricted by range, that is controlled by order flow. Now, a lot of my research, we run Bloodhound. The entire room is run on a Bloodhound template. The bar is restricted by range and is controlled by order flow. Now, let me talk about that for a minute. I have done a tremendous amount of research on trading with order flow, and what happens is you get all these indicators on your chart that are giving you an indication of what's happening with the order flow, and but your brain can't handle it. And so what I've done is, it's 2 levels deep. First, we're structuring the data, the incoming data, in terms of these bars. And what the bars do is, if buyers are overwhelming sellers, the bar can only complete going up. If sellers are overwhelming buyers, the bars can only complete going down. Okay. Now, that basic structuring causes the bars to look a little different than other charts will. It also compresses the charts and makes them much less noisy than other charts. You'll see how smooth these charts are. And that's because the charts are based on the way the market works. More buyers and sellers goes up. More sellers and buyers goes down, right? And so the bars are not allowed to structure themselves in the wrong direction, and thus you get these patterns like what I just talked about, like the Me Too and the E2 patterns. Okay, you'll get them on other kinds of charts too, but in here they're really meaningful, because what you have when you have these things is you have trapped traders. And so by structuring our data around the way the market works, and then having that Bloodhound template, what that does is it picks up order flow analysis that goes beyond the bar level and causes trade triggers to occur, or it may also be used as a short-term trend indicator. But what we do is we find certain kinds of setups, and then we go down into the bar level and let Bloodhound trigger us into the trade. And we'll talk a little bit more about that going forward. But the idea here is that we're working from a bottom-up structure. We're structuring everything around the way the order flow works and the way the market works, and then we're going to work outward from there into higher and higher contexts. And then when we trade, we're going to start at higher contexts, statistical probabilities, and we're going to work our way all the way down to the order flow level. And so we have a design system that is working one way that is opposite the way that we actually do the trading, and they meet in the middle, and it works. And I've been doing that for 20 years in the design of automated trading systems. So due to their logical ground-up construction, megabars create unique patterns in reading order flow that cannot be found in any other bar. The bars are a 5-tick construction with a 10-tick reversal. These bars are only found in the oil trading room. In a few minutes, we're going to look at some patterns. We already talked about E2, Me Too, the 112 pattern, these kinds of things. Okay. This creates several highly unique situations and opportunities for traders, particularly combined with the mega chart template, the background colors using Bloodhound. This oil trading room chart framework is the same exact framework as the Smart Patterns trading system, which is also designed on the same premise. And Smart Patterns works in a bunch of other markets, and so that's available through Indicator Smart. Now, the bar patterns enable us to see where traders are trapped and where they're lined up in favor of our entry. And so we're going to cover a couple of those patterns in a couple of minutes. This one that I have drawn on the chart, that's called a railroad track pattern. And we're not going to cover that one today. but we do have others. But these railroad track patterns are highly reliable with the right kind of momentum and patterning. In fact, we traded some of those, or at least I traded some of those today as the market went higher in the second half hour of the day. Okay, E2 pattern. I'm going to show you a powerful strategy that is an adaptation of a technique taught with the ultimate tick bar in the manual called 4 Amazing Day Trading Setups. If you go to indicatorsmart.com and you opt in, if you scroll the page down a little bit on the right-hand side, you're going to see 4 Amazing Day Trading Setups. If you opt into that, you get a copy of that ebook, okay? So you can go over there and get that, indicatorsmart.com, scroll down and opt in for that, and it'll send you a copy of the 4 Amazing Day Trading Setups. But this pattern was originally written about in that manual, wrote that a few years ago, and I adapted it into the megabars. So it uses an encompassing bar pattern on the megabars in conjunction with the room's smart patterns template for Bloodhound. These two together, okay? And further, it uses the template as a trend indicator and not just as a trigger. Further, the encompassing bar is where one bar overtakes another, all right? In other words, it is higher and lower than the previous bar. It's encompassed is a phrase I use. And so that's where you got that name E2 pattern, encompassing pattern number 2. This system is so effective you can trade it as a standalone system. I don't recommend that you do because there's a lot of other really awesome things that you can do with it and combine it with other methods, but you can. And it's so simple, I'm going to teach it to you in one sentence. Here are the rules. Look for bars the same color as the previous bar. So the previous bar is green, right? And so you got a green bar. And the same color as the template. The template's green, trend is up. And trade on the break of the previous bar. That's the entire pattern. Let's take a look at what that looks like. Okay, background's green, right? I have a 5-tick bar right here. And this tail of this bar exceeds the low of the brick. It exceeds the low of the brick, and it breaks out the other end of the bar. Okay, these things happen all day long. Here's another one, 5-tick bar. You go below the 5-tick bar, and you break out the other end of it, 15 ticks. Boom, boom, boom. Here's another one. You get the 5-tick bar, you come down, you take out the low of the brick, and you go out the other side of it. Notice each one of these is with trend. I'm recommending that you would do these with trend. And that is called the E2 pattern. Now another one, that's kind of a variation on that, we call the Me Too pattern. It uses an encompassing bar pattern on the megabars, but it occurs on a reversal bar, a 10-tick bar, instead of a 5-tick bar. An encompassing bar is where one bar overtakes another. The system is so effective you can trade it as standalone. This is a good kind of second triggering system, actually. Here are the rules. Look for bars following a reversal bar, where the reversal bar is retraced at least 50%. To 50% retracement, and trade the break of the reversal bar. I like to do these with trend. So let's take a look at what that looks like. Here's one to the short side, but that one's against the trend. Here's one I have marked that's with trend. Market's cycling up, and you get this reversal bar right here. You do a 50% retracement, you go out the other side. That particular one's good for about 10 ticks. Come back down into here. We call this a pivot retag trade. I'm not sure if we're talking about that today or not. And you get the reversal bar, and you get the 50% retracement, and you go out the other end of it. That one's good for about 20 plus ticks. Me Too pattern. When you see these, here's another one I didn't mark. The reversal bar, 50% out the other end with trend. Now there's also all kinds of other patterns that are going on in these bars that will happen in conjunction with these that makes your probability is even higher. Okay, I'm now going to show you a powerful pattern called the 1-1-2 pattern. It uses a fake out pattern that results in trapped traders like the other patterns we just discussed. Anytime you see a reversal bar plus a continuation bar followed by 2 reversal bars, you get a 1-1-2. Now don't send me a bunch of emails asking me what this is because I got it on the screen there, and it will take you a while to learn to see this. Reversal bar plus continuation plus 2 reversals. Now that's going to come up as green, green, red, green, or red, red, green, red. This pattern is so effective, some room members trade it almost exclusively. The unique characteristics of the megabars make it work, and there's an advanced training on the Oil Trading Room blog. It only takes a few minutes to learn this pattern, but to identify it in real time takes a little bit of time. So let's see what this looks like. I just have this one marked. I just had whatever these charts were from a day or so ago. I just grabbed them. Okay, you get a green bar plus a green bar plus a red bar plus a green bar. 3 greens and a red. And then you trade it on the break. This pattern's almost invariably worth 10 ticks. Now, why is that important? Well, because if you can get into a 10-tick trade and you're trading multiple lots, you can get a portion of it off and let a runner go. We talk about that a lot in the room. We also talk about the context of letting that runner go and how much potential there is for it in association with the probabilities that are happening on that chart. Like, for example, at this particular time, I can tell you right now, I know that there's about a 90% probability that I'm going to take out that red line right there. And I may have another known probability, maybe in about the 80% probability that we're going up into here. And we're going to talk about some of those kinds of scenarios too. Now, when you know that kind of stuff while you're trading, it's a lot more relaxed. And if you're wrong, you know, if you're wrong and you get stopped out, you just go, huh, I was wrong, but there was 80%, so that's cool, you know, and you're not condemning yourself, which is a horrible pattern to get into. You know, for every condemnation of yourself that you do, you probably need to do 10 affirmations to make up for it. So if you count all the negative ones that you've done to yourself over the years as a trader, you know, you probably owe yourself about 10,000 affirmations or something, right? So you don't want to get into that pattern. You want to stay in a positive mode where when you get stopped out, you go, hey, I did the right thing. Why do these bar patterns work? Because of the unique characteristic of the megabars. Encompass bars and 1-1-2 setups can be indicative of situations where traders get caught on the wrong side of the market. Their stops fuel the move. These patterns can easily be made into a system using the Oil Trading Room charts. You'll see we're going to get into a bunch of other charts here. It's really cool. Reading trend in the room. The Oil Trading Room trend chart is 87% accurate in predicting the next bar. This is an example of me putting together something that is statistical. The SMART trend system is designed to keep you on the right side of the market in a way that's easy to read and follow. It simply tracks higher time frame bars than the one we're trading on and paints them according to the trend, blue for up, red for down, with a known statistical probability. Trade with color bars on the room charts. Don't trade without it. Don't leave home without it. In addition, on this chart, we used the SMART zone system to identify key areas of support and resistance. It's just a simple system of supply and demand reading. Further, we use SMART price bands to identify areas used by higher time frame players. Well, I think we'll see that on the chart in a second. One pattern you can trade with this system as a standalone is what I call a 30-minute bar violation and their variations. This is taught in the room. Now, what's humorous about this is some vendors charge like $5,000 for this system. It's virtually statistically identical to what this is. And but what I did that's different is I do the statistics on it, and so I know what the stats are. I know it's at 87%, and we know various patterns associated with those bars result in higher probability trades. So what's this look like? It's just simple. Up bars are blue, red bars are down. If the bar turns blue, there's an 87% probability the next one is blue. All right. Now, if you look at these days, for example, in A period here, you go red, and then you go red, 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 down into this low, and then you go blue, and then you get three nice up bars. This day is actually pretty complicated. J period goes down here, and you get some follow through in the K period. K period's the last 30 minutes of the day. Each of these letters is 30 minutes of the day. The first one is the first half hour of the pit session. And so similarly on this day, A period comes out, turns blue. It's the first 30 minutes of the day. The rest of the day's up. A period's blue on this one. You get this ambiguous one here. Trades lower for 4 or 5 bars, and then trades up for a couple, and you get ambiguous in the afternoon. A lot of days you'll just get this A turns blue, runs all day kind of thing. This is yesterday, actually. I think it was yesterday. And so these bars can really keep you on the right side of the market. Now, the average range in crude oil is about $2 a day. And so if you can position yourself early in the day, you can get caught in $1,000 moves, or $2,000 for that matter. But it doesn't usually play out that way. You usually get some deeper retracements in there. But if you can get a good runner on, you can position yourself for that. And a lot of the statistics we do are associated with trying to get yourself into those kinds of situations. And so, we're not, trying to stab on a trade for, 7 ticks. We're trying to get caught in a $1,000 trade. You don't have to. I mean, you can definitely trade shorter term. If you need action in the way you trade, hey, fine, all the power to you. But it's nice if you get a runner on every once in a while. And there's a lot of statistical reasoning why. It's a whole subject that I could lecture on for an hour. There's a lot of reasons why you want to let that runner trade go. I had one today. I was up $500 on a 2-lot, and I gave almost all of it back because I was looking for a runner into what was statistically correct. I had made money on the trade because I took half my position off, but it was a statistically correct decision to let it run, and it didn't turn into a loser, but I gave a lot of it back, But it was a correct decision based on what was happening at the time. So, why does the smart trend system work? The smart trend system is accurate about 87% of the time on a 30-minute crude oil chart. It's true because the market is correlated to itself in relation to the system. Some vendors charge $5,000 for this. In the oil trading room, it's simply included. Don't be part of the 13%. I laughed when I wrote that. Don't trade against it. Don't trade without the oil trading room. This chart makes trading so comfortable because you know what the probabilities are, and if I'll just won't trade against it. Now you'll miss some moves. You'll miss some really nice moves, but you don't need to worry about it. And we've got some ones. I'm actually doing a lot of research on ones that turn a little faster. Actually, I was up until 3 o'clock in the morning last night working on that. And so we're always working on improving the statistics that we're able to hit on these tools and things. So that's really what I enjoy the most is getting down to the nitty-gritty of these things. So types of trend. What are they, and how do we use them? There are 4 ways that you can determine trend in the room. The trend system that we just discussed, and then cycling. So how's the cycling work? Cycling's so easy in the room. Now you can get into more complicated ones, and you'll learn that if you hang out long enough. if you take the time to learn it. But basically, starting with A up here, A, B, get a green bar. C, turns red again. D, get a green bar. E, F. It's just simple. You're just counting color changes. And so that's cycling. When the trend system is lining up with the cycling, that's a really good thing. Another one we do is momentum analysis. What's an example of that? Well, this momentum tool is exploiting a tendency for the market to get longer wavelengths as it extends. This is something I've worked on for many, many years. And so what happens is this, these alternations are actually going in the opposite direction to price. This is going up while the price is going down. And so this trigger point in here is a good trigger point with that. We call that a type 2 divergent pattern. And it's a with trend divergent pattern. And I talk about that a lot. Another one we use is the trap trader oscillator. And we're going to talk about that too. And this gets down into the kind of mechanics of what drives the market. You have traders on the wrong side, phase 1. Their stops are getting hit. Phase 2, but by then you're onto your runner portion of your trade, and then phase 2 is you are going to get new sellers or buyers, new money coming in to propel the move further. The trap trader oscillator tells you that there's trap traders, and I think we're going to cover that. Yeah, we're going to cover it right here. So I'm not going to try and pronounce that word that I wrote there in the first sentence. Uses sophisticated order flow analysis to identify trap traders. The technique is only a part of the oil trading room on megabars, and this technique simply look for type 2 divergences in the retracement zones with trend. I'm going to cover how you do that in a minute, but we just covered it on the momentum tool. It's the same principle. These are areas where selling is overdone in an uptrend and where buying is overdone in a downtrend. As the market moves against this group, their stops will propel your position to a profit a large percentage of the time. Now, that idea there of stops, you're talking about the principle of old money versus new money, which is actually a whole nother lecture we could spend an hour on. But when stops are getting run, you have a group of people who are leaving the market. They're exiting the market. That's not what moves in the market begin with that activity, typically, forcing out the weak hands, people getting out of the market who are on the wrong side. But then that new money needs to step in. So you get this new money, old money kind of concept going on, and it relates to the alternation of the market. We're getting back to the order flow concept right here, right? And so we're going to take a look at what this looks like. Okay, we're actually reading the momentum of the order flow when we're doing this. And so what we do is we're cycling up here, market's cycling up, and we see that this has gone way lower than it should have. And so we're looking for some buying activity over in here. You see you get a nice Me Too there also. You get the background color change on Bloodhound, you get the Me Too. There's other ways you could have triggered into that trade also. Again, come back up, swing back down. This is a 5-tick rule. We're going to cover that in a few minutes. Selling's way overdone. Bunch of traders on the wrong side here. There's way more selling into that region than should have been. And so when this market goes higher, all these guys over here, just stop, 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 up to a new high. We can actually have tables, probability tables for how far this will go above this high in the room. I know it's going to take that high out by about 10 ticks, probably about 80% of the time, something like that, just off the top of my head. You get to know these stats after a while. We do it again. We come back down into this zone right here. This point to point is lower. Trap traders on the wrong side, shouldn't have been there. Come into K period or just before it. You're triggering, that's the last 30 minutes of the day. and you trigger into this trade. And either off of the Bloodhound or off of other methods that we use. There's actually, when it broke through that red line right there, was also a trigger into the trade. Trap Trader Oscillator. It's great. Why does this pattern work? The Trap Trader Oscillator gives a more detailed and inside look of our chart that is already organized by the order flow and natural market structure of the chart construction. Trader orders stack up into key areas where traders get on the wrong side of the market. When the market starts to move into the stop region, it can tend to pull the market in your direction. Trades that occur at or near these levels can be higher reward potential and lower risk potentially. Don't leave home without it. 5-tick rule. We've already seen a couple of these in the last chart we looked at. One of the best trading setups is to trade in places where traders are trapped. Now, we talked about traders being trapped in a bar pattern. And then we talked about traders being trapped on a larger scale with the trap. We talked about 3 bar patterns where traders are trapped. Then we talked about the Trap Trader Oscillator where traders are trapped. And we're going to talk about another place where traders are trapped. Okay? The 5-tick rule looks for cases where a previous pivot region is taken out by 1 megabar or less and then reverses. Now what happens at the point that that occurs is it breaks a cycle. If you consider that higher highs and higher lows are an up cycle and lower lows and lower highs are a down cycle, this breaks the cycle, but it only breaks it by 1 bar. Sometimes it'll break it by 2 if the market's really moving. We use our patterns and triggering system to enter the trade. Trap traders stops fuel orders in the direction of your move. You guys get tired of me saying that, but it happens. That's the way it works. Okay, I've drawn a little magenta line here to this low. See, I've drawn that line from that low, and I've carried it forward into here. This bar took it out by 5 ticks. These guys right here, A, B, C, D, these guys are gunning up for short. Trap Trader Oscillator is way down here. That Trap Trader is all in this zone right in here. And then it rolls over. It's the same chart we just looked at. This high right here is a 5-tick high. This one here is a 10-tick high. This one here is this high right here is this one's a 5-tick high. Then it doesn't matter, fake out right there. But we don't counter trend, so we don't worry about that. We'll just catch this next one. This is a 5-tick violation here also. I didn't mark it. Trap Trader Oscillator. Same things we just covered. Trigger into the trade. So why does this work? The 5-tick rule shows areas where the market is slightly overdone against the trend, and then it fails. It's a failure pattern that trap traders on the wrong side of the market. It also defines a region or zone where there's a defined rule set that enables you to function with a trading plan that allows for trap traders or violation of the cycle, but it's limited to 5 ticks. And so you've got a rule, because a lot of times if you work on the strict rule of higher highs and higher lows, and you take it out by a little bit, often it's a fake out, and you need to have a rule set for dealing with that so you don't get into that situation where you're wrong. This is a very important concept. Okay, OTR stats. This will get interesting. The oil trading room has a wide array of statistics for just about any period of the day. The stats enable you to literally trade with known probabilities. When we trade in the oil trading room, we know what the probability of success is within certain limits. This is much more advanced than an automated trading system, as I discussed earlier, because it's adaptive. And so you don't have to worry about it failing. An automated trading system is always faking you out and it'll fail on you, right? This is an adaptive trading system to a wide range of market situations. Because of OTR stats, we have a much better idea of when not to trade. And I don't even mind when I miss something that's going on in the market that's not consistent with my statistics. I wait for those opportunities where it is. You don't have to, but in time you'll probably figure out that's what you want to do. As far as we know, there's no other source of information of this kind. Many of the stats are in the high percentages, 80s and 90% plus. We use combinations of statistics to determine a path of least resistance. I brought that up before. I'm not going to be able to get into that path of least resistance in a lot of detail, but the general idea is if I've got stats piling up on each side of where we are right now, the market's going to follow the one that is the least resistive, generally speaking. This gets into what's called a conditional probability problem. That's beyond the scope of this lecture. And use something called Bayes' theorem, which is really interesting. If you want to do some study on that, you can Google it, Bayes' theorem. So we have a good idea what the market's trying to do in any given time of the day. If you really want to learn to trade, this is really huge. This is just, it's comfortable. For example, we have already covered the OTR trend system, 87%, right? We know if we get a setup within that frame, the probabilities are in our favor. And so there are other stats that we do too, like we might know that the market's going to extend to a certain level as an 80% probability level. Sometimes these levels are like 50 ticks away or even more. This can get us into what's called conditional probability problems. We just discussed that. There are blog posts that cover this kind of theory for members and resources there. If you're serious about trading, OTR stats are a tremendous thing to learn. It'll take you some time, though. This kind of thinking is not natural to humans. As a matter of fact, there's a whole subject of behavioral finance that gets into this kind of stuff. It's fascinating. Books like Nate Silver, The Signal and the Noise, books like Thinking Fast and Slow, Daniel Kahneman. Really tough reading right on that one. Learn to think this way takes time, but we have the resources, and I keep talking about it over and over and over again in the room. So using this kind of knowledge with your money management helps you to scale your trades right. It's really awesome in a money management context. You know, you take off so many, get to a break-even trade, and you know what the probabilities are, and you peel off accordingly at each probability level as it's occurring. The key about oil trading room stats is we know the probabilities and when they're in our favor. Much of the trading can be a mental trap. This eliminates the trap and lets you not beat yourself up over a loss because you know if it was a correct decision or not. OTR stats are known by members, so you begin learning right away. Now, let me say something about all this. This is delivered in the room in a very unpumped up way. Stats work and they don't. You're in the world of probabilities, and so it's something that you will learn over time. It's counterintuitive, but when you're there and you do enough of it that you get it under your belt, you begin to understand the market from that perspective. It's really good. But the thing is, you won't just learn that in a week or 2 weeks, and so you gotta commit to learning it. Okay, interval statistics or period stats. Interval statistics enable us to break the market down into chunks for analysis that are meaningful and statistically significant. Okay, on a room chart, you'll see a yellow box. You might have seen them on some of the prior screenshots. For each period that shows a number of statistics that shows us if our target was hit, the number of ticks, where we closed in the range, and the range over the last period and periods. Period statistics apply to the 30-minute intervals of the day. See these little boxes here. This chart's kind of stretched out because I had to fit it into here. Okay, this one's telling me F period. The range is hit. We went up 57. We went down 0. The open is that blue line right there. We closed in the upper 33% of the range. And this is telling me where I am in the last 30-minute and 60-minute ranges. These period stats. Range hit, range hit, range hit. You miss a couple on I and J, and then you get range hit in K. And so these extensions, this green line, is the period target. Didn't hit it, hit it, hit it, hit it. And so when you're entering a trade at or near these levels, you know what that period stat's going to be, and you can adjust your position accordingly. And these stats go on for each period of the day. The numbers in the yellow box tell us what has occurred inside the white box on the chart. Now, each of these white boxes represents, this box right here represents the 30-minute chart, and our other support and resistance charts are 30-minute charts. So it's mapping the other charts onto our trading chart. Each of these intervals also has a letter corresponding to it to the period of the day, A being the first 30 minutes, K being the last 30-minute period of the day. By understanding how these periods organize themselves as the day unfolds, we know a lot about the intent of the market. Some of this information is also illuminated by our two-room 30-minute charts. The top left chart is our profile and support and resistance chart, and the bottom left chart is our zone chart or trend chart. I don't have these shown, and we're probably not going to have enough time to do those today, but they're in the room at the top left, and you can see back in time so that you can see where you are on those charts. There's advanced learning for interval period stats on the Oil Trading Room blog. The main point about period stats is they tell us if the market is behaving normally. That's one of the main points. And they give us a targeting system. They frame the market into a highly advanced form of market profiling analysis that is completely independent of a profile, value area high, value area low, those kinds of things. They are statistically significant. The same principles we've been discussing for period stats are also applied to larger time frames. Why is this important? Because it literally enables us to predict large range price extensions with high probability. I had mentioned earlier, I know right now that the average daily range is about $2. About $2. We also know the percentage of time that range target is hit. And so if I'm 50 ticks off of the open, and I also know at which level that the low of the day is protected. We have stats for that. And so as the market starts extending, I know what's remaining. And so I've got this large-scale context that tells me if there's enough room left for my trade to expand. And if you get positioned early enough in the day on these kinds of things, or early enough in the period, you know that you have a potential for 50 ticks. The average period is about 50 ticks. And so it opens up a possibility to get in 50-tick trades several times a day or more. So, for example, we've gone 67 ticks today off the open. What's the probability it can continue higher, and by how much? In what period is the most likely or most common? These are stats that we know. These are kinds of problems we solve with data and statistics we have in the room. Opens up the probability for getting caught in large trades and or positioning yourself to get in large trades. Getting caught in large trades, why is that important? If you study statistics of financial data, you'll find that most gain is gotten by a few outlier trades. These events are often quote-unquote unexpected or quote-unquote exceed expectation. What is interesting is these events make up 80% of the market movement in less than 20% of the time. I'm just saying that off the top of my head. 80-20 rule, 90-10 rule. It's something like that. Okay, Wednesday, for example, crude inventory report. 120 ticks in crude oil in 1 minute and 20 seconds. Half of the day was occurred in a minute and 20 seconds. How many minutes are in the day? 360. So, you know, 250th of the day happened in, you know what I'm saying. It's generally impossible to specifically prepare for this kind of move. However, you can manage your trading such that you get caught in such moves under the right circumstances and with controlled risk. This is how athletes become great. They consistently get themselves into the right situations again and again, giving them the opportunity to benefit. We could talk about batters, for example. This kind of awareness is occurring well above the activity of the trading itself. The batter knows, if he's a good batter, that if he goes and he does what he does, that every once in a while he's going to knock one out of the park. This kind of foundation we work on at many levels in the oil trading room. The Oil Trading Room is an amazing resource for serious traders to learn to trade and develop advanced skills and knowledge. Each day we have lectures on market open and advanced trading topics that cover what we've discussed today and beyond. Many days we also do advanced analysis in the afternoons where the opportunity is high, during the periods where the opportunity is high. Join an amazing community of like-minded traders who know and or who are developing these techniques. To join, be informed, and read over the rules page on the website, oiltradingroom.com/rules, or just hit the rules tab on there. Take a look over the FAQs. The Oil Trading Room is not like anything you've ever seen before, as you can probably gather from this webinar. Read over the reviews page to see what other traders are saying. oiltradingroom.com/reviews, or just hit the reviews tab. The Oil Trading Room is for traders who are intelligent, I'm not saying that in a funny way, and willing to work at their trading. We teach you to fish, a skill you can keep for life, but you'll have to work at it because these concepts, as I said, are not entirely normal to most people's thinking. And there's a whole area you can get a degree on, you can get a PhD in why that's true. Why people consistently do the wrong things when it comes to trading. Behavioral finance. If you're serious about your trading, sign up to get access for the Oil Trading Room, blog posts, room statistics, room lectures, advanced topics, 100 blog posts covering advanced trading topics and concepts that are supported by the daily lectures, a perfect learning environment similar to a college classroom, and mentorship. The only place a dream is impossible is in your own mind. We have many traders that have gone from being losing traders to being successful in the Oil Trading Room. Join the Oil Trading Room for a 2-week trial offer for today's attendees and stay for life. Now, you can't learn what we're teaching in 2 weeks, but if you get in there and you just don't vibe with it, I understand that. So I give you a coupon here for a couple of weeks. oiltradingroom.com/STO. STO. Special trial offer. oiltradingroom.com/special trial offer. Key in the coupon code STAY after 14 at checkout. Or you can also place your order off the home page at oiltradingroom.com. That won't be for 2 weeks. So use the STO special trial offer address right there for a 2-week trial. Make today the day you follow your dreams and aspirations and learn trading techniques based on statistical, repeatable fact, patterns that occur over and over again in the market. Okay, I'll open up for questions. If you guys have some, I'll be happy to answer them in the few minutes that we have remaining. Everything that we teach in the Oil Trading Room can be used on other markets. Everything that we teach can be used on other markets. But you do it in oil because you will learn faster there. You don't want to sit around watching a chart that's not moving. And oil almost never doesn't move for a length of time. You can trade on any kind of chart you want in the Oil Trading Room. Doesn't matter what platform you have. You also don't need to buy any software to. We trade during pit hours, but I'll often open the room up to an hour early. I'm not sure. I think Shark's probably recording this, and hopefully they'll get some video footage over to me, and I'll get that posted on the indicatorsmart.com blog, or they might be posting it. No, bars don't backfill. We had talked about that today in the room. Bars that don't look after the fact what they look like before the fact. Ha ha ha. Gotta love that. We do recordings in the room, and so the lectures are recorded for the lectures that you attended, and I post them on Friday afternoons, and you can go in. They're unedited recordings, but you can go in for that first 2 hours and catch the lectures. In fact, that's an amazing resource unto itself, an amazing resource. You can't purchase the megabars, they're just for the room. But we have all the levels on there and everything you need to trade. Yes, I'm personally trading in the room. That's what I do for a living. However, I'm not going to specifically call out a trade, and I'm going to tell you why. I'm going to tell you why. This is extremely important. I will tell you where I'm trading. If you're listening to me, you will know a good percentage of the time. But the triggers that I'm teaching you, like the 1-1-2 pattern, the E2 pattern, the Me2 pattern, the high volume pivot retag pattern, blah, on and on. You pick what you like. Now here's the thing: crude oil, bid-ask spread, 8 by 11. 100 guys aren't going to fire a 2-lot trade into that. It's going to be a mess. It's going to look like the crude inventory report. So you place your trades off of the chart, and you get your own liquidity. But everybody knows that trade's there, because if you learn the room rules and you learn the setups, you know what they are. And so it's just that simple. And so what I'm forcing you to do, if you just want to get into an environment where somebody's calling out trades, not going to do that. You're going to have to learn to be in the room. And so, if you don't vibe with that, if you think that you're going to be successful as a trader watching somebody call out trades, it's probably not going to happen. But in the room, you'll have the opportunity to experience that and have an ongoing discussion about it as it's going. Pretty awesome. There's 100 articles on the blog, Richard, covering every aspect of what you need to know. Yeah, so. All right, thanks again to Shark for having the Sharkathon today, and thank you all for coming and enjoying the webinar. I hope you learned a couple of cool techniques. My contact information is here, support at oiltradingroom.com. You can call the phone. I never answer it. It's got to be by appointment only. And generally speaking, I'm going to refer you back to email. I'm a one-man shop because I'm a trader for a living. I help people learn to trade, but I don't have an office and a staff and a bunch of people to process a bunch of orders and all this kind of stuff. So please be respectful of what I'm trying to do as a lone operator here, just trying to help people out. And I look forward to seeing you guys in the room. Coupon code, I keep forgetting it myself, stay after 14. oiltradingroom.com/STO, special trial offer. Stay after 14 at checkout. Okay, guys, thanks again. And Sean, thanks again so much for having me.